Welcome back. Mr. Keki Mistry is waiting by on the phone line to give us his take on the monetary policy. Vice Chairman and CEO of HDFC. Mr. Mistry, good morning. Well, what is your view on the key takeaways from the monetary policy?
I think the policy was pretty much in line with what one would have expected. And the RBI would continue with its tone on, having a sort of a neutral stance. And they would say that inflation is something which they need to worry about. But barring that, no change in interest rates. And I think that stance is pretty much sort of played out. I think the only couple of things that stood out is one is this mention about the farm loan waiver. That could put some little bit more inflationary pressure than what they were originally expecting. And the positive is that oil prices have not moved up the way they had done between December and February. And the monsoon outlook continues to remain a little uncertain at the moment. So if the monsoons turn out to be bad, then we run a serious risk of inflation. But my personal view is that if monsoons turn out to be all right and commodity prices remain as benign as they've been, oil prices remain as benign as they are, there may still perhaps be, over the next 6 months, possibility of another 0.25% cut in interest rates.
Okay, but this morning we have geopolitical issues to worry about as well, right? So oil prices have moved up higher. Some of the statements made by the governor were a bit cautious, raising fears of perhaps even a rate hike in case inflation does not come under control because of the reasons you mentioned, monsoon and now an oil price hike. You reckon that there could be a rate hike coming anytime soon?
No, I would believe that with the monsoons, I think the critical thing I would look at is monsoons. Number one. Number two, I would look at global events, that there is no sudden global shock that comes into the system. And if both these, and the outlook on both of this was benign, we expect, if we were to assume that monsoons were to be normal, and if we were to assume that there would be no shock coming from overseas, then I believe there is a scope for interest rates to be reduced by 0.25%.
Mr. Mistry, good morning. Do you expect more interest in real estate sector now that banks can invest in REITs?
Undoubtedly. I think in REITs, when it opens up, it's opened up, but when we see actual REITs being created in the system, I think there is a massive demand for REITs. The demand comes not just from banks and mutual funds, the demand will also come from individuals. Because as an individual today, the instruments in which you can invest are pretty much known. But if we create a new instrument where people can participate to some extent in real estate transactions, today, if you're a middle class man and you have let's say 50,000 rupees to invest or 100,000 rupees to invest, you cannot invest 50 or 100,000 rupees in a real estate project, be it residential or commercial. So REITs gives you the opportunity of participating in the real estate market, getting the upside in the real estate market, and at the same time generating a certain amount of fixed return, which comes out of the rentals that are received on the property that is rented out. It brings with it some element of risk, but in that sense, it is not as safe as, let's say, a fixed deposit product of a bank would be. It brings in a higher element of risk, but it also brings in a much higher return. And I don't think the risk is that high.
Okay, thank you, Mr. Mistry, for joining us and giving us your quick take. We'll take a short break.